this point. Amit Gupta is with us from PMS Motilal Oswal Private Wealth. Amit, good to have you back after a while. Thanks very much for joining us. It's a painful looking screen, and that's the feedback from everyone. I mean, people are scratching their heads, wondering what to do, where to find some ideas in. What are you doing, and where are you focused on? And you know, tell us a little bit. Tell us some interesting stuff you're doing. Large caps and all, we keep talking, but you know, anything interesting you're able to find from an absolute return perspective.
Yeah. So I think, first thing is there that when the rupee depreciates, so we saw recently the rupee was coming almost closer to 90 levels. We have seen that as a result, the market also come under pressure. And this time, the broader market has taken that beating actually broadly. And if you look at the index perspective, it is holding mostly around 26,000 because the banking and IT both had very compelling valuations, no doubt about this. So banking has not participated big time, and I think the mid cap private banking, the PSU banking, in fact, some mid cap IT stocks, I think they can come on the fore and they can start performing going forward in this consolidating market. So I think this is what we are also looking at. Yes, some kind of rebalancing has to be done in the portfolio, because if you had taken suppose real estate stocks before, because previously there was a thought process that after GST cut we may start seeing the consumption play coming into picture, and real estate also is one of that theme, but actually commercial real estate is doing better, and as a result the REITs are doing better over there. But residential, I think the luxury segment is has more promise right now, and that's why you have seen some correction. So rebalancing definitely required in the market because some of the chips are down. But I think the banking and IT can give you some kind of support, so you can look at some mid-cap ideas from there.
All right. Hi, Amit. Good afternoon. Good to see you. By the way, a bit of an expiry-related move taking place on the Nifty. Moves to the low point of the day, and the Nifty Bank as well. Sharp decline, though that 25,900 mark, that's still getting defended. And that should be the case, really, by the time we wind up today, going by the options data. 25,900, important to defend today. Amit, among your picks, I think you're fairly positive on some solar companies. Debatable one, you have a very bullish argument, and there's a very bearish argument that I hear as well. But you're bullish, so tell us the rationale.
So first of all, my sense, in fact, our sense is that if you look at the capital market companies, renewable companies, digital companies also, though with some volatility, I think, and EMS companies also, I think these are the, new compounders in the market. So they will come with volatility. You will have to face it. But yes, in your portfolios, they can give you good compounding if you look at little longer period of time. Now, coming to the renewable piece, as you were asking, so solar definitely, solar expansion is happening very significantly. Previously, we had very limited players, but now the players also are rising. They are coming on the boards also, getting listed. And I think solar as a piece, so if you look at initially only module manufacturing was there. So there was always a fear of China dumping in this particular area. But then the government came out with approved list of model manufacturers. That was a very good trigger. And that's why the local manufacturers had a good time. But now the module manufacturing also is picking up very large extent. So now the time is there. And this is where the stock picking should happen, that we need to look at in the value chain, which companies are expanding more into the solar, into the cell manufacturing. So cell manufacturing is the next piece which is going to pick up pace. Vari Energy, for example, they already have in excess of 5 gigawatt. It has been the leader in the market. They had a good capacity in module. Now they have increase in cell manufacturing. And our sense is by the month of June 2026, you will see another approved list coming out for cell manufacturers. And that is where if somebody has built in good capacity in that area, I think they will do well in the market. And not stopping here. Going forward, possibly in another couple of years, you will see another list going to come out for ingot manufacturers. So if somebody can work out on the ingots, and as per my understanding, Vari, they are working on and looking to have 10 gigawatt actually of setup in ingot also in another 2-3 years. I think they will also be the beneficiary of this. So it's a time now. In these areas, you need to look back into the value chain where there is more value, and actually increase your setup, increase your capacities over there.
Got it. Okay, all right. Interesting one. By the way, as you gave us that answer, just pull up the chart on the Nifty as well as the Nifty Bank. Seesaw, big volatility out there. The Nifty Bank has fallen closer around, I think, 200 points in a matter of around 45 minutes or thereabouts. Massive decline is what we're seeing. Nifty at a very crucial juncture. You don't want that 25,900 mark to break decisively. You have a reference point at the 20-day MA, but the options data suggests that that mark should not get broken. Otherwise, you could see a further slide out there. Moving to Hormuz, he's joining in to put our spotlight on all the top movers at this hour. Hormuz, take it away.
All right, time for choppy days, but trying to find out some movers that are bucking the trend. And one that is decisively doing so is Karnataka Bank. It's the third straight day of gains for the stock. Now, in this 3-day up move, the stock has surged 23%. And even in this volatility, the stock is up 8%, holding on to those gains. And the last 3 sessions, today's volumes are the lowest among this 3-day losing streak. But of course, it's still going towards the close of the trade. 31 lakh shares that have been traded today, 20-day average of around 8.5 lakh shares, and the turnover that the stock has seen in the last 3 days is 30% of its overall market cap. So well over 2,000 crores, the market cap of around 8,000 crores as well. So as a result of this 3-day move, the stock is also trading above all of its key moving averages and has nearly turned positive for 2025 as well. Now, Kiri Industries is another name in the small cap space that is bucking the trend today. 12% higher on the stock, snapped a 3-day losing streak today. It's the biggest single day gain for the stock in over a year. And after almost around 1 o'clock, there was a very sharp spike in the volumes that were seen on Kiri Industries today. Volumes as of now are the highest in 2 months, with 12 lakh shares that have been traded, most of which have been traded in the last couple of hours. And the 20-day average here is just around about 2.5 lakh shares. And as a result of this move, the stock has now convincingly moved above its 200-day moving average of 581, but it's been an underperformer so far, and out of the last 5 years, 4 of them have seen the stock deliver negative returns. And last one on the list is HEG, and this too has snapped a 3-day losing streak in today's session on very strong volumes at 6% higher today. 57 lakh shares have been traded. The 20-day average is around about 25 lakh shares, so double of its 20-day average. The stock has now moved above its 100-day moving average of 517 and has extended its gains in the last few minutes and has moved above its 50 DMA as well, which is at around 524, and as a result of which the stock has turned positive on a year-to-date basis.
Thank you very much for that. Those were some of the buzzing stocks. Back to chatting with Amit on the show. Amit, Urban Company, any thoughts on that? It exploded on the day of its IPO. It's at 135 now. Issue price was 103. But I remember on day one itself, there was about a 60-65% pop. Then the stock continued to rally on, hit 200 rupees. And since then, there's been a bit of a downward slide. 135 now. At what point does Urban Company start looking attractive?
So my, biggest worry in this company is, though I like the digital companies, but it's sort of phygital because they are sending a lot of people actually for working into the customer's hand. My biggest worry is that some of these customers actually, they create their own customer base. So you are creating a platform and giving the opportunity for others, and others actually they are creating opportunities for themselves. So this is a worry that they have to sort out this particular thing actually in the company. And that is where actually we are not looking at this right now. There are better digital companies actually available in the market currently, which have seen correction also. And that is where I think we need to focus more.
Got that. Amit, we'll leave it there. Thank you very much for joining us. Good speaking with you, and thank you for joining us here this afternoon. 25,882 now is